Okay, so let's get started. So welcome, my name is Dan Rayburn. I'm the conference chairman. It's great to see everybody here. Today I'm going to be talking with Tomas from CDN 77 about the state of the current CDN market. For those of you that track CDN or involved in CDN in any way, there's always something to talk about. Whether it's architecture, what's being deployed, what customers are doing, multi-CDN strategy, DIY, there's a lot of talk of the edge, which we'll talk a little bit about as well. But it's always a fascinating topic. The reason I wanted to talk to Tomas, a couple of reasons. So first and foremost, it's very rare when a private company will ever disclose what they're actually doing financially. So a couple months ago, sat with them actually in New York and asked, could I put something out that talks about your finances? Actual numbers. Most of what we see in the industry from non-public companies is revenue grew 28% last year. Yeah, that doesn't tell me squat. I don't know what that means. Off of what base number? And if you have $1 in your pocket, I give you a second one, right? You now have 100% more than you had. It sounds great. It's still just $1. So I appreciate CDN 77 saying, yeah, let's put out some numbers. Let's show people the size and scale that we are. We've been around a long time. They're very quiet, very humble. They're not really out there doing a lot on purpose, which I like. Focus is key. They're not trying to be everything to everybody. So I wanted to highlight not just some of what they're working on, but also we're going to talk about the general overall industry. We're going to talk about changes that we see going on with customers, multi-vendor strategy. There's been 2 vendors that have exited the market, StackPath and Lumen, from their CDN portfolio. The companies still exist, but they've just gotten out of the CDN space. CDN 77 has picked up some customers as a result. So that's what we're going to talk about today. Real quickly, as you can see on the slide here, for those that can't see this in terms of recording, 2023 revenue for CDN 77 was $145 million. Cash flow positive for the last 10 years. So small, focused, but here's what you need to know. If you go to cdnlist.com, that'll take you to a post on my blog where I have the running history of the entire CDN market dating back since Sandpiper, one of the first CDNs, started. You can see alphabetically every CDN that's been in the market and what's happened to them over 26 years. There's over 60 CDNs that have exited the market. Now, some exited at a time when they got a good acquisition, others have not. For instance, we recently saw Edgecast get acquired through Limelight. They got acquired for 0.5 times revenue, so not even 1 times revenue. Other CDNs have done better. My point is that very few CDNs have ever made it past $100 million in revenue in the history of this entire industry. Very few have ever made it past 100 million. That seems to be where they get stuck. And then when they want to get past 100 million, they have to raise a huge amount of money, which means automatically they're in debt. So CDN 77 is really taking a different approach in the market. They're already over 100 million. Cash flow positive, very important. They focus on video. It's where they get most of their revenue from, so they're not doing WAF, DDoS, bot mitigation, all these other things. So, Tomas, thank you. Let's jump right into this here. There's a lot I want to cover. We're obviously limited in time of what we actually can. But let's just start with, what was the point of sharing your financials that you wanted to tell the market? And also, why are you so focused? Because some would say, well, video, low margin, high volume, high CapEx. Why would you focus just on video and not move up the stack to security?
Yeah. Okay, thank you. Good afternoon, first of all. I guess it was around November, October last year when StackPath and Lumen went out of business, and we immediately spoke to a good number of their former clients, and the usual discussion with potentially just revolves around performance metrics, testing, price. And this time we heard a lot of questions about our business continuity. So that was kind of another aspect that we felt that the clients took into consideration. So there were questions like, what are your plans for the future? Are you going to be here in the next 2 years? We got honest questions such as, are you planning to sell yourself to Akamai anytime soon? So these type of questions. So we actually decided to publish our figures and make a statement to the market that we're in good financial conditions and we're planning to be here for the years to come. So that was the main reason. Secondly, we felt when we talked to some of larger accounts that the market didn't really know our size. So that was the reason number two.
Which I think made a lot of sense. As we spoke, I did, because you guys are quiet and subtle, I would have customers say, I'm thinking of these guys, CDN 77, but I don't really know if they're big. I don't know if they're going to be around. And so many customers have gone through CDN providers over the years and don't want to have to move again or put another one in the multi-CDN strategy. So very smart approach. We've seen it, very few vendors ever do this in our market. BitMovin is another one that let me, as you saw, release their numbers, even though they're private. But this is very rare for a vendor to do, but it's extremely smart, right? And more vendors should definitely be doing that. So I want to go through just some of the trends we're seeing today. Doing more with less. As you know, I did a blog post about 18 months ago where I talked to a lot of the major content owners, and I detailed how they were cutting back on the highest rung bitrate ladders to save on pricing, right? Because bits are important. 4K. Now, you pulled some really interesting information here. So one of the things that Tomas nicely did just a few days ago is he pulled across all their customers the trends of 4K, because as an industry, we're talking a lot about 4K. But the actual amount of 4K that's being delivered across content delivery networks is really, really small. So to give you an idea, 4K takes up between 12 to 15% of all of the content libraries of their customers. 8 to 10% of all the initial requests are made for 4K, but 4K represents less than 4% of the overall playout time on their network. This is reality. This is from customers. So Tomas, talk about what you're seeing with customers in terms of getting past COVID.
Yeah.
Suddenly they had to cut costs, what they're doing regarding encoding in 4K.
Yeah, I think I'll start with ABR and ABR algorithms, then we'll move to 4K. And first of all, the entire video delivery ecosystem, from the processing to play out, is kind of full of trade-offs, and
Voice.
Quality.
Yes.
So and in terms of ABR, there's a storage cost, there's a compute cost, there's a bandwidth cost, and the quality as well. So we see clients kind of experimenting between these, and what we see, rather than just cutting ABR profiles or bitrates, by all means, is that the clients are much more aware how their users consume the content and adjust bitrates accordingly. So there's this, I would say, clients maintain the relationship between bitrates values and the business values it brings, so to say. And more specifically, we actually saw, sports TV raising up bitrates for specific types of event. We see that in Formula One, that when there's a lot of action and changes, they actually tend to raise the bitrates. But some other clients, like advertisement agencies, we saw kind of capping ABR profiles to 720 and not going higher. Some clients actually think carefully about the use of codec, and it does a lot to do with the geography of their viewership. So we see clients having the entire library, some baselines, let's say, with H.264, and then just re-encoding part of their library, the most viewed content, to H.65 or AV1. And again, there's this trade-off between how much data you store, how big the video library is, what is the cost of compute. Then we've actually seen some of the clients go in full H.265, and in some cases it actually didn't bring any bandwidth reduction, because they then realized that the player actually assigns higher qualities to users. So it actually, what it brings, that now clients are actually looking into the ABR algorithms as well, so what the player does. And
so if the player's defaulting to 4K, they may not allow it.
Yeah, exactly. It's a separate situation with 4K, because sometimes, and we see that quite often, that clients actually don't force 4K as a default quality, even if the connectivity allows. So they would do full HD and let the user decide whether they want to do 4K instead. So you actually save bandwidth. You offer 4K kind of on demand, but the client has to do the step to choose that bitrate.
I'm not surprised, and I think we'll continue to see that. Some of the other trends that we're looking at here is, for those that don't know, This year is the 19th year that I've been collecting CDN pricing in the market. So twice a year I go out to about 1,000 customers using all the major CDNs, and I collect who they use, what they pay, length of contract, price per gig delivered, per meg sustained, 95.5, whether or not they're bundling it. If you go to cdnpricing.com, I've been publishing that for free for about 15 years. I no longer publish it for free because everybody from Wall Street was using it and making money. So I started charging them for it. But if you need CDN pricing, if you're looking to renew a contract, I work with some of the largest content owners in the world to help them do that free of charge. If you're someone who's looking for help with that, provide that a free service. Now, I get a lot of emails all the time like, Dan, what's the lowest pricing I should have? I don't know, what's a new car cost? What are you trying to do? Commit levels, like region of the world, live, on demand, bit rates. But one of the things you mentioned when we were talking beforehand is you're seeing much lower willingness from customers to commit.
Yep.
Which is interesting because you're also dealing with more of the, what I'll call mid-tier customers.
Yep.
Right? You're not going after Disney. You're not going after Amazon. Now, what's unique about this is it's a smart approach because the Amazons, the Disneys, the Microsofts, right? The big companies out there, of which there's a handful of them, want the lowest price in most cases. They're the hardest customers to work with. It's the least amount of margins, keeps you from being profitable. So you guys took a different approach, was let's not go after the top 25 largest customers. Let's go after the mid-tier, where the margins are higher, the price point is higher. Yes, they have less volume, less traffic, but you'll make that up in volume. So from a commit level, what are you seeing in terms of how customers are now committing? Because COVID changed everything.
Yeah. I mean, first of all, going after smaller customers, we go after literally any customer in the market now. But I think since we're coming from Europe, we actually saw that there's a lot of local players, and because of the language differences and cultural differences between a continent, so it's kind of slightly different.
So I would call that regional service providers?
Yes, exactly. And they actually compete with the big players such as Netflix and Disney on the country levels or regional levels, and they often win in specific regions. So that's one of the places we have actually gone. And when you put those clients together, it's a lot of traffic, exactly. And you diversify the portfolio. Also, you often can make healthy margin on a single client. So that's one of the approaches. In terms of the commitment levels, I think we see kind of the change in pricing structure request, and there's a couple of things that go together with that. First of all, I've never seen a client who would like to change CDNs every 6 months. No one says, I'd like to recache my entire library in 6 months. So it's not necessarily driven by a desire to change CDN, but the lower level of commitment gives client certain freedom and flexibility to kind of not to be committed when their level of traffics go down, even though it doesn't really happen, but it has to do something with the multi-CDN strategies. And what we actually see that clients have almost real-time or close to real-time data about what is going on the CDN level in terms of performance. And that is relatively recent. And we see a lot of almost real-time and dynamic traffic relocations between the CDN based on the performance, sometimes on the ISP level.
So you're saying the QoE is more real time.
Absolutely.
Shifting traffic
Absolutely.
On an ISP level.
Yeah. Or a country level. It depends on on a client. But like 2 years ago, we would see that clients evaluate the performance metrics once in a week, once in a month, and then reallocate traffic. Now those changes actually happen sometimes in real time. So if a CDN1 has an outage or congested line to a specific ISP, the traffic goes through another route, through another CDN, and obviously lower level of commitment gives you flexibility to do these things, and you don't have to care about you want to make sure you don't pay for the percentile even if you don't use it. So it has something to do with the freedom to move traffic across CDN.
So more intelligence.
Yeah.
The other thing I've seen tied to that intelligence is it's interesting for some of the larger vendors, some of the larger customers, the CDN vendors, they'll say, okay, of the 100%, we'll commit 20% here, 20% here, and 20% here. That's it. And then that other 40% they're not committing to, they are sharing amongst whoever happens to be best that day or best that month. And it also means their commit level is low. And yet, as a customer, they still want the lowest price. That said, you might be surprised that some of the largest customers of CDNs out there are paying a lot more than you think. And the reason they're paying that is it's global distribution. And the cost to deliver video in APAC, Latin America, India is much, much different. Also, there's certain CDNs that only have true capacity and coverage in those regions compared to others. Focus is obviously really important. Let's talk just multi-CDN strategy a little bit, because I hear directly from the content owners, and then I see others write in the industry a broad statement like, everyone's moving away from this or that. Let me give an example. Disney used to have 6 CDNs, they now have 2. And it consolidated down to 2, and yet they're global. But then you have someone like Paramount who only had 1 or 2 and went to 6 or 7 globally. Now, which one's right or wrong? They're both right.
Yeah, I mean, there's no right and wrong. Again, it's a strategy.
Right.
And
what are you seeing amongst, because usually multi-CDN was only highest tier, largest customers, $50, $100 million.
No, we see that much often now. And
mid-tier.
Yeah, exactly. And it comes down to the reason why you use a multi-CDN in the first place. So it's the coverage, depending on your geography, scalability. You need to balance the traffic between CDN. Then there's resiliency, of course, and economy. And again, it's about finding the balance, because if you let's say reduce the number of CDNs, you can then use the economy of scale, because when you assign larger amounts of traffic to an individual CDN, you might get the lower unit rate. At the same time, you're losing the resiliency a bit. And so it's all about a strategy and where you're actually going with that. Let's say when you expand to new regions, you want to make sure that the CDNs in your stack actually cover that region fully, and you get the best performance everywhere you go. And what's actually interesting is that when you use a number of CDN in your stack, you're always, in terms of functionalities, you're always limited to the common group of functionalities in terms of features. And it's actually, I don't see that as a problem with the static CDN, but sometimes when clients use edge strategies as well, then the number of CDNs that can provide the same functionalities actually shrinks. So that's one of the reasons that some clients actually limit the numbers, because it simplifies your workflows and the CDN management, obviously. Yeah.
There's a couple of things we can talk to here, but actually I want to get to some questions if we have them, because this is I take so many calls and emails all day long about CDN, so it's one of those topics that just always people have questions about. So if you have a question, raise your hand. No, you guys are going to be quiet today? Yeah, all right, so it's kind of more of a quiet audience. They just want to listen. That's cool.
We're quiet too,
That's okay. They are. You guys are real quiet. So let's talk ultra-low latency. I'm tired of hearing about it, personally. It's not needed. Everyone keeps saying for gambling. Who is doing in-stream gambling right now? I'll tell you the answer. Nobody. Right? Who is going to do it? Nobody. Certainly not in the next couple of years. How do we know that? Well, let's take an example of Fubo. Fubo came out years ago and said they were going to do betting. They had a betting division. We're going to do it in-stream. After a couple of years, they came out and said, we're closing this down. We're not going to do it. The technology just to do it doesn't exist today. We'd have to invent that. Right? It's too complicated. You can't do it at scale. Now, the ultra-low latency is very interesting too, because you'll notice the Super Bowl, large-scale live events. It's not being done in ultra-low latency. Now, one of the things that Akamai and others, I give them very good credit for doing this, they have publicly come out and said, this is really hard to do at scale. That's the key here, right? Anyone can deliver content with great quality, but now do it at scale with certain QoE metrics. That's different. So talk what you're seeing with ultra-low latency. You have the customers running on your network.
Yep.
How many are actually doing ultra-low latency based on your definition?
Very few, if any, to be honest. So, and by ultra-low latency, I mean sub-second latency. We see demand for, let's say, 10-second latency CMAF. So what used to be 30, 40 seconds now comes down to 10, and we see that a lot. But I agree with what you said about, that it's super hard to deliver ultra-low latency in scale, and we do HTTP, so we haven't gone WebRTC, but I think the scalability of WebRTC is even harder. But the protocol itself, when we speak of HTTP is not an issue. You can get the sub-second latency with HTTP, but the issue is when you transfer the data across long distances and you try to scale it, because the shorter the latency is, you lose the buffer, and the cache doesn't really work. There's no cache efficiency, and you need that constant flow of data between the source and the client. So it gets really complicated. So it actually brings new requirements for the CDN. And in our case, we've literally rebuilt the entire network by actually, deploying global backbone, going directly to, eyeballs, ISPs, kind of reducing the number of third-party routers along the way, because you really want to be in control of your capacity and utilization. And so
Not seeing demand.
no, not for ultra low latency.
Yeah,
There's no, again, it's a trade-off. Because no one wants to jeopardize the performance.
So it seems every time we talk CDN, people talk tech, right? But they don't talk what the business value is behind it. I worked on one of the Super Bowls recently for one of the companies that did it, who hired me as a consultant to come in and look at the entire video stack 6 months before. I got to monitor the Super Bowl, right? I can't blog or talk about any of that, unfortunately. But what I can tell you is when they looked at doing ultra low latency, the extra charge for the Super Bowl was $1 million. $1 million. Now, first question you have to ask as the person running that company is, am I going to get more advertising? No.
Yep.
Am I going to get more free people watching the Super Bowl? No. What is the business value in doing it? Zero. And yet as an industry, how many vendors and others out there are still talking ultra low latency? Now, it has died down quite a bit on the CDN side. There's still some transcoding vendors out there, but what is the use case they're doing it for? They're doing closed surveillance security, military applications, yes, it's a whole different story. Gambling, but not gambling within streaming, poker, horse racing. I've seen some great examples there. But the idea that we're going to get the Super Bowl, other events down to what we see on broadcast, it's not going to happen. Yeah. It's just reality in the market. And so the scale and complexity is very hard to do. You're hearing it directly from a CDN, and the cost to do it is so expensive as well. It's just not needed in the market. Let's go into, because we still have some time left, consolidation. So we've seen a huge amount of consolidation in the space. At CDNlist.com, I now list just the CDNs at the top that are left in the industry. Below it is everybody who's exited the space over the last 25, 26 years. There's only a handful of vendors left in the market globally. Then there's more companies like yourself that are more regional in different regions of the world. Do we see more consolidation happening? I have a thought on that, but this is your time, so I'll let you just say what you think in terms of what you're seeing. We're going to see.
Yeah, I think we've seen consolidation in the last 27 years. You've said that, that the 60 CDN actually left the market, and I think we'll see, in my opinion, we'll see a bit more consolidation between the what we call legacy CDN, even though I hate that word. What I actually see is, rather than consolidation, is the migration of traffic between CDNs, because the recent trend we've picked up is that some large players are, in some cases, no longer interested in specific types of traffic where there's no upsell potential, different vertical
services.
security, edge computing. So it's not just about the consolidation, but the traffic migration between the existing vendors, and that's what I see that is actually going on.
Microsoft. Nobody wants Microsoft's download business anymore. I'll come out and say it. They don't want it. It's just downloads. It's large. There's a lot of traffic. The price point is so low. Microsoft said not going to use them for edge computer cloud security. No, we don't want it. Right? That's a good example of a customer where it's just there's not enough value distributing that on your network.
Yep.
There's very few customers that size as well. But do you see where you think more? We haven't seen too many regional providers either join, combine, consolidate, or get acquired. We've only seen larger companies acquire or just exit the market completely.
There's actually a lot of going on the ISP level regionally, because when we go local, we sometimes get into competitive situation with kind of ISP-based CDNs locally. So we see that more often, that kind of growth of regional CDNs.
More so in Europe as well.
Yep.
Yep. Yeah. So let's touch on just ISPs as the last thing. So for those that don't know, we've been talking about dating back 12 years to federated CDN. We had licensed CDN, managed CDN, what was called LCDN, MCDN. We had an alliance of carriers who got together, so AT&T, Telefonica, there was 4 of them who got together and said, between all four of them globally, they pass something like 60% of all the eyeballs out there. So they decided to do a federated CDN. Of course, it didn't work. We kind of all knew that. If any of you work at telcos or carriers, you know how slow they move. They're not going to work with another telco or carrier. It sounded great on paper. It didn't work. So this whole federated CDN model pretty much went away. Quilt's still doing some stuff, obviously, with Cisco, where they're showing some success. You have some like Broadpeak and others who are selling a solution inside an ISP. But in 20 plus years, we haven't seen much traction of that, and I don't see that continuing to where it displaces CDNs. Would you agree with that?
I do agree with that. I think, you know, the internet as we know it wouldn't work without CDN as we know them now, and I think this will continue, even though some players go into different verticals. Traffic is not going away, and it's actually growing. So I see a bright future for CDN players when you do it smartly, when you have a focus, and when you kind of allocate your resources.
That's the key.
Focus. Focus, yeah.
If you take out Netflix, you know, take out a handful of companies out there, 100% of everything else you're streaming is coming across a third-party CDN. Right? Even Amazon, Prime Video, right? They're using multiple, 5, 6 different CDNs every year, even though they're also delivering stuff on CloudFront. But everything you see across Paramount, Fox, CBS, Hulu, Disney, almost everything at Disney, pick any streaming service you want. NFL, Major League Baseball, now YouTube TV, right? They're doing their own stuff because it's Google. But outside of those few services, everything else we are streaming as consumers is going across third-party CDN. So this idea that because StackPath exited and Lumen exited, that CDNs are going to exit the market completely, or the idea that, you know, Akamai is no longer in the CDN space, I hear that all the time. Right? They did over $1 billion last year in delivery revenue. Note, I said delivery revenue, not CDN revenue. That's how they report it in earnings. But CDNs are not going to go away, right? We need CDN 77 and others out there to consume all the content we're seeing today. So Tomas, I thank you for joining me today. We're going to stay here and take any questions. Like, just come up to the stage afterwards. We have an hour-long break for lunch. We're going to kick the sessions off on time at 1:30. But if you have any questions, come up and talk to us. And we appreciate you being here today. Thank you.
Thank you. Thank you.